Good afternoon, traders. It is Tuesday, January 3rd, 2017, and the U.S. stock market is closed. Well, the new trading year got off to a roaring start. A little bit frustrating, but still better than what we experienced the last week of 2016. In some ways, the Dow kind of did what I predicted. It took off this morning just like crazy. The Dow ended up opening up around 150 points this morning, and I wish it could have kept going. I wish it could have kept going and taken out this um, psychological barrier called 20,000. The problem we had today in the stock market, we have what I'll call them the never 20,000er traders. And they are traders who are uh, coming in and shorting and taking profits right below this 20,000 point. And what was frustrating to me is that the last week of 2016 we had this relatively large sell-off, and you know we could have made a lot of money if we could have bought down here below the ceiling, but it pops up this morning and basically forced us into a huge bunch of positions again, pretty much just below that ceiling, and this proved not to be a very profitable place to get in. What happened today is on Friday of last year, we had negative, I think, about $6,000. That certainly improved. This morning, when stocks opened up at one point shortly after the open, that negative 6,000 was up to about positive 16 or 17,000. So we gone from negative 6 to positive 17. That was pretty good. The problem is we didn't get out there, and as soon as not too long after stocks open, the never 20,000ers come in and sell the hell out of this thing. And what we ended up doing is getting out with positive only $1,300 on those trades from Friday. And then the other ugly thing about this was, of course, we get this huge gap, we buy the gaps, and we ended up getting into 27 new positions. Um, 11 of those are positive, 16 are negative, because we're buying up here and then holding through this big sell-off, bull spike down here, and then come back toward the end. Thanks to that rally at the end of the day, we are holding positive $3,600, just $3,600 with 27 positions. That's normally a little scary, but this doesn't look very ominous to me at all. I'm going to predict that the Dow will go up tomorrow. This thing could even go up and finally take out 20,000. I hope it does, because we need to get rid of these never 20,000ers. They're just driving me crazy. And when the Dow does break through that barrier, you better believe it's going to scream, because there's a whole bunch of stops on these short positions right above that point. So that is my analysis for the first day of 2017. It's not too bad. I'm not complaining too much, but I hate these kinds of opens, these big up opens, then a sell-off, and then added to that was a rally at the end of the day, which was good for us. But it just shows you that the never 20,000ers are not going to get their way. This is a bull market, and it's going to take that that number out very shortly. I'll show you how this affected us on one of the stocks, and this is pretty typical of several of them. We had bought Unit Corporation, UNT, on Friday of 2016, almost bought the high tick of the day there, and then it went against us pretty significantly. But this morning it just tracks the Dow perfectly. It jumps way up, gets way up here. Normally we would be getting out up here, but because it had such a powerful move, the system signals to stay in for another day, and that was the kiss of death. So it tracks the Dow selling off. It's finally stopped out right here for, I think it was like a $500 loss there is what we took in it. It goes down and does the bull spike with the Dow, then rallies, and right at the end of the day we get back into it, holding something like a positive $50 on the close. Pretty crazy stuff. And this was the problem. That pattern in the Dow followed with many of our stocks, and that just is not a good pattern for our system at all. Very volatile and very difficult to play. We did have some good trades. This is CRC, California Resources, and we had bought this on Friday 2016, about the middle of the day, and it, like the Dow, pops way up on the open. We got out of that with $2,500 positive. Now, note how, unlike unit corporations, we got out at the good time, and that's where we made all our profits. We would have made, I don't know, $3,000-4,000 in unit corporation if we had gotten out at the same time we got out of CRC, but we did not get out of that unit corporation, ended up getting stopped out. We got out of the California Resources here right there, and it also sold off, but we were not in it by that time. So that was a real good trade. Finally, I will show you the star of the day, and this would have this saved us from having a kind of rotten day today. Actually, said we did have a profitable trade, albeit not as profitable as I would have liked on the first trading day of the new year. But anyway, this is the GGAS, which is inverse natural gas. We had bought this middle of the day on Friday, and it actually closed against us. Then we had this humongous gap this morning, and a gap where it kept moving. And as a result, we're holding over $14,000 positive, and that is the one stock that carried the day for us today. So let's hope that thing holds for tomorrow, because we'll be getting out of it tomorrow. Anyway, that's the way it went on the first trading day of 2017. This is Trader Bob signing off. I'll see you tomorrow on Wednesday.